Good afternoon, everyone. I'm Stephanie Fisher with the Education Department of Michigan Bankers Association. Thanks for joining us today for Voice of the Consumer, attracting new customers to your bank. Our speaker today will discuss target marketing, consumer likelihood of switching banks, among other topics, hot topics, and well, sounds like we're going to have a little bit of a credit union discussion as well. So I'd like to introduce you to Steve Bruin. He comes today from Foresight Research. He brings over 30 years of marketing research and marketing planning experience, including, it looks like, close to 20 years at Daimler Chrysler. He has been the innovator of several major programs, published articles for the American Marketing Association, been the recipient of a number of awards, and his work has been reported in Harvard Business School Press. Steve has an MBA from the State University of New York and is an adjunct faculty at Wayne State University Graduate Business School. Welcome, Steve.
Thank you so much, Stephanie. So ready to kick it off?
Yes.
Okay. Foresight Research has been around for about 25 years, but for the most part, we've been working with the car companies, and this is a list of some of the clients, or most of the clients, that basically we've worked with all the car companies, almost all of the car companies, along with a lot of their agencies. And then we decided to get into banking primarily because we talked to some folks who had told us that there was a need for good marketing information among smaller banks. Of course, the large banks have a lot of research, and we've done some of it. So we took a look at this about 3 years ago and said, how do we do this? We knew that there would be some constraints. First of all, it has to be reliable. It has to be good data. Our motto has always kind of been bad research is worse than no research. And so then we knew that was an issue. It always is. But the other issue is we had to come at this at a very affordable price. And we're able to do that through syndication. And so we are producing three kinds of reports. One is, so we built a database. So basically we can data mine. And our database runs around 15,000 interviews a year. And then we have basically three kinds of reports. An individual banking report, a particular bank wants to understand how they stack up against the competition, or they want to know about their market, that kind of thing. Then we also have local market focus reports, which are basically state, state measurements by state. And then regional. And let me get into a little bit of why we do it that way. In order to understand in depth consumer behavior, you can't do it with a sample of 2 or 3 or 400. If you can bring together a sample of 10 to 15,000 interviews, which is what we do annually, and you can really drill down into what's on people's minds in detail that a client can use. It's pretty granular. The second step of that is, okay, that's all well and fine, but that's regional. And I want to know about my state. And then we take the information from the state and we compare it to the regional report. And that way we have very affordable information. We have local information, and we have drilled down into the issues. And the categories that we are working on are basically the broader categories of business development, communications, both media and messages. What's going on in my market? If I'm in Lansing, what's going on there? Technology, customer experience, and along with the payoff for good customer experience, consumer expectations and satisfaction, and the branch. So this is the basic categories. Here are some of the reports that we have generated thus far from this process in the Midwest. And as you can see, it's consumer resistance to AI. There's a lot of resistance to AI. There's a big communications task as we move forward into chatbots more and more and more. Digital versus branch banking, closing branches, what's the penalty for that? The fintech, we find that fintechs have a lot of vulnerability. And as you can see, what we've produced here, and here are the Midwestern markets, is about 20 of them. And what the last one you see there is attracting new business to your bank. That's what we're going to show today. That's what we're going to jump into at this point. So the biggest takeaway is this is a database, extensive database. There were about 12,000 interviews before the pandemic, about 1,000 during the pandemic, and we have so far about 9,000 post-pandemic, if you can say post-lingering pandemic, I guess. And some of our stuff has been published in the Financial Brands. What we're going to talk about today is attracting business to the bank. It's based on 2,800 surveys administered in 10 Southeast and Midwest markets, 750 in Michigan, both Detroit and outstate. Screened, every respondent here has been screened, and they are at least 18 years old, and they either make or share in the primary banking decision for the household. And then finally, all data is demographically weighted to U.S. population, census population information. So make sure we have a representative sample. Okay, with that, let's start out. Market potential, defining the market, who's out there? This is regional. So about 15% of the market are Gen Z, and Millennials, Gen X, and baby boomers, and there's a few above age older than baby boomers, all account for about 28% of the market. The reason Gen Z is smaller than the rest is we cut off at 18 years old. So of course, Gen Z goes all the way down to near zero, I guess, but certainly that's not who we're interviewing, only people 18 to 25 in that category. What we find is 16% of the entire sample says in the region says they intend to switch their bank or credit union in the next year or two. Now, we also measure longevity. How long have you been with your bank or credit union? And that number comes out to typically around 12%. So the intended switching going forward is a bit higher than what has occurred in the past. It was 12% before the pandemic. And during the pandemic, we sampled right at the height of it. It went way up. It was up in the mid-20s. But it is coming down to levels that are higher than before the pandemic, but not significantly higher. However, when it comes to Gen Z and Millennials, that number is not 16, it's double that, it's almost 30%. So the opportunity for target marketing is clearly in the younger age group. And of course, the good news is they also represent the potential for long-term customers. We were wondering, are they really worth it? Do they have the incomes to be meaningful? And the answer to that is yes, they do. 82% of this group have an income greater than 25,000, and 40 to 47% are in the 50,000 to 150,000. So these folks have the money. Now, I do want to say this. There are segments of the population who are excluded from this sample. For example, and most importantly, is people living below the poverty level are not in this sample. So these incomes will tend to be a little bit higher because of that. What do these people look like? As you can see, the blue line there are Gen Z, and the brown line are Millennials. And 39 and 51% bank with a large multi-branch bank. And about 15% or thereabouts are with smaller banks. Similar numbers with fintech, similar numbers with credit unions. And interestingly, almost nobody in this group does not have a primary bank by the time they're 18. That's 6% and 5%, very small. So any kind of marketing strategy that you're going to put into place has got to compete with the existing primary bank, because the number of first-time buyers or first-time customers is going to be very slim, very small. So you have to get the people away from their current bank. What do they have in terms of product? Well, not surprisingly, they have checking account, savings account, credit cards overwhelmingly, compared to other accounts. Although IRAs, to my mind, in this age group is kind of high. It's interesting, and mortgages, and you can see the rest of the products that they have. Personal loans among the millennials are greater than Gen Z, which is not a surprising matter, since the millennials have formed households and in many cases will have families, and Gen Z is probably approaching that. On average, millennials have 2.8 accounts with their primary bank, and the Gen Z population has about 2.1%. What about secondary banks? Most have a secondary bank. You can see with the answer to none is 14 and 22. So arguably somewhere around a total of 20% of this group, excuse me, about 80% of this group have a secondary bank. And the large multi-location banks don't have anywhere near the market share that they do with the primary. Digital only is quite large, interestingly enough, and as you can see, what the market shares look like in this region. And the accounts that they have fewer of them, of course, about 1.5. But once again, checking accounts, savings accounts, and credit cards lead the way. IRAs are again in a pretty good shape, and you can see that the other accounts typically are around 5 to 10%, something like that, varying by type of account. How do they bank? Overwhelmingly, they bank with mobile banking and peer-to-peer payment apps and online banking. Overwhelmingly, they do that. The numbers that you're looking at is like, for example, 51% of the Gen Z say that they use mobile banking weekly or multiple times a week. When you go down the list to branch banking, you can see it's about 1 in 4. For millennials, about 1 in 3 are frequently in the branch. Oh, excuse me, I read the long line. That's the ATM at the branch. The branch itself is down around 15%. We wanted to find out about longevity, and this chart here shows you how long they have been with their bank. And as you can see, there's kind of the sweet spot is 3 to 5 years. It becomes interesting as we move forward through this presentation. We're going to talk a lot about dissatisfaction. Obviously, dissatisfaction takes a while to get embedded. So we're going to focus on that 3 to 5 years spike that you see. Among the millennials, you'll see that 26% of them have been with their bank or credit union 10 years or more. They are solidly entrenched. That's a market that you wouldn't even think about going after. Millennial number is substantially smaller, lower than that. Not surprising, since they haven't had the opportunity, for the most part, to be with their bank any length of time. But you can see the outside of that anomaly, the chart is pretty consistent. So what have we learned here? Well, we've learned that most products are checking, savings, and credit cards, and less often loans and investment accounts and CDs. They're frequently using both digital and peer-to-peer apps. They're not visiting the branches frequently. And 1 out of 5 have been with their primary bank or credit union for less than 5 years. Okay, so that's the basic background of what the millennial banking market looks like. Now we're going to focus on the switchers, the people who are intending to switch, and because that is obviously what you have to target in any marketing effort, because only 5% of them are going to be first-time customers, so they're going to come switching from someplace. Remember, what we said earlier was that about 30% of Gen Z and millennials intend to switch in the next year or two. What do they bring with them? Well, they have checking accounts, savings accounts, and credit cards, very much like the millennial big market. They're much more likely to have an IRA. The switch Gen Z and millennial switchers are the brown bar. All of the Gen Z and millennials are the blue bar. You can see they're much more likely to have an IRA, but they're also more likely to have loans of varying nature, which is kind of interesting. And the switchers also have a slightly higher number of accounts, 2.8 versus 2.6. When we look at again, the longevity chart, it's the same pattern, but it's exaggerated yet. The blue line are all Gen Z and millennials. The brown line are Gen Z and millennial switchers. So they are much more likely to be with their bank or credit union for less than 5 years, with 3 to 5 being the spike, as is the reason we put a box around it. What do they use? Well, not unlike their counterparts, they are using mobile apps, and they're using peer-to-peer payment apps, and they're using online banking. But they are much more likely to be using an ATM at a branch location, and more likely to visit a branch location frequently, that being weekly or more. So that's an interesting statistic. Having branches may not be a key ingredient in developing marketing messages, because they are more likely to use a branch, and they are dissatisfied frequently. Although there's some controversy about that one. So we look at where people are banking, and this becomes very interesting. Again, the large banks carry the day, but among switchers, look at the difference between digital only bank and among the switchers versus the population in general. All of the Gen Z and millennials among the big group, only 15% of them are using a fintech, but among the switchers, it's 26% are using the fintech. And a sample this size of 2,800, that's a very significant statistic. So we're going to use that in a minute and show you how show you the vulnerability of the fintechs. Okay, we looked at dissatisfaction. What are people dissatisfied about? Well, not surprisingly, savings rates are at the top of the list, followed closely by loan interest and credit card fees. And secondarily, conveniently located branches offering good financial advice, which goes along, of course, with branch banking, and credit card cashback programs. And then it kind of dwindles on down, but the top of the list is about money. It's about interest rates and fees. Now, this one, though, when we single out fintech, which are the brown list, so the blue that you see there are all Gen Z and millennial switchers, and the brown are digital only Gen Z and millennial switchers. And what you get is a significant increase in dissatisfaction with regard to branch locations. Now, that comes as no surprise, of course, but it's very significant. There's a lot of folks that are with their digital only bank that are not at all pleased with the lack of branch locations. They're also significantly more likely to be upset about credit card cashback programs, either the non-existence of them or it's not good enough, one or the other. And when we look at the switching, something interesting that happens here is now that 3 to 5 year sweet spot becomes even more important. 37% of the switchers from the fintechs are falling into that category. And interestingly, the defection is occurring earlier. The difference between the yellow line and the brown line that you see that the arrow is pointing to shows you the increase in defection at very early stages. So the dissatisfaction with the digital-only bank is setting in much earlier, and people are pretty upset about it. And as you saw, the market share in this group is the switchers, the number of people who are leaving or plan to leave the fintech is almost double that other banks and credit unions. So with all of that said, what's the source of sales? Since you have to get the business away from somebody else, where's that? What is that somebody else? Who is it? Well, among Gen Z, 36% of it has to come from the large multi-location bank, and about 29%, the source of sales is got to be the fintech. Now, in the case of the large banks, that's simply a matter of market share. They have almost 50% of the market, but that's not the case among the fintechs. They only have 15% of the market, but you can see where we expect to get the business away from is very often going to be the fintech. Millennials are similar. They're much more likely to have bank accounts and relationships with the bigger banks than is the case for Gen Z. So 44% of the target that you're going to be competing against are the big banks, but still almost 30% of it comes from fintech. So that's about that's just where the source of sales is going to come from. We asked about incentives, and what kind of an incentive do you find most useful and the most preferred? And not surprising, it's cash to open an account. That's particularly true among millennials, recalling that they more often have accounts than Gen Z does. So I don't think that surprises anybody, but that is, if you're going to use an incentive, cash is king. So summing all of that up, what do we have that we can use for marketing content or message delivery? Best target is Gen Z and millennials, 30% tend to switch. They have a variety of loans, IRAs, and deposit accounts. In the peak switching years of 3 to 5 years, long enough to set in dissatisfaction, but not so long as to become entrenched. The digital-only bank infection occurs earlier. Greatest dissatisfaction, interest rates and fees, with additional areas of dissatisfaction, not as pronounced as fees and interest rates, but still important, are locations, cashback on credit cards, and loan interest rate, particularly among the digital-only switchers. Cash to open an account is a top incentive, and the source of sales are the big banks and the digital-only banks. So the marketing message that would most resonate, targeting the dissatisfaction that people have with their primary credit union or bank or fintech, are savings interest rates and loan interest rates. Secondary messaging being we have good, convenient branch locations, and their peer-to-peer mobile payment apps and digital, online and mobile. When we look at the branch locations, it's not in this report, but it does exist, is that they are not frequently used. That is to say, only 10, 15% of people are using them once or twice a month, a week. But when they want them, it's very important. The convenient branches remain one of the critically high levels of expectation, even though the use of them have declined substantially. And other secondary messages, credit card fees, cashback programs, incentives to open an account. Okay, so that would be the marketing message themes that you would turn over to your agency to write some really appealing copy, I'm sure. Okay, so how are they going to go about funding their bank, their new bank? Well, half of them are going to go to their secondary bank, which brings up the whole subject of vulnerability that you have with a secondary bank. It's a very easy thing, or relatively easy thing, to switch over to the secondary bank, make it primary, probably just moving some accounts. Much of the rest of it would already be in place. And then about a third of the people are going to seek out a new primary bank. Now, about half of these folks, of course, are going to be moving their accounts for uncontrollable reasons. They're buying a house in a different town, their family formations, a number of things are going on, particularly in this age group where life happens in a real hurry, and change occurs in a real hurry. But they're going to, 50% of them are going to go to their secondary bank, and a third of them are going to seek out a new bank. So when it comes to media, let's look first at the 1/3 who are going to seek out a new bank. How do they want to be approached? What media is preferred? Well, not surprisingly, especially in this group, it's all about email. It's all about internet advertising. It's all about social media. And it's secondarily about TV. Now, the thing about that, of course, is the TV gives you a lot of reach, but it doesn't usually, it's not particularly effective at delivering a lot of messaging, not nearly as effective as some of these other forms of communications that are substantially more expensive. And then secondarily, direct mail. So those are the media that you probably consider putting into your media mix. Radio has fallen on hard times recently, as I'm sure you're aware of. Those are the media. Now, some numbers of people will click on your website, but reaching out is always more effective than having them reach out to you. You do a website, obviously, but it's not as effective for this task as some of the other media that you have at your disposal. We do an awful lot of research on events. And of course, event marketing does exist in this industry sector. And so we took a look at where are the switchers, what kind of events are switchers attending. And you can see that there's quite a lot of difference between Gen Z and millennials. The Gen Z is much more likely to attend a sporting event and go to a concert, whereas millennials are much more likely to be found at a theater, both a movie theater and a legitimate theater. And they're much less likely to not go to an event at all. When we're asked about, did you look at the number of people who did not attend an event among Gen Z, it's only 1 out of 4. Among millennials, it's over 40%. So that probably speaks to family conflicts and responsibilities. They don't have as much free time to do some of these things that the younger group does. Okay, now let's look at the second group, targeting switchers who are planning to use their secondary bank and to replace their primary bank. That's half the market. Well, for the small local banks, they have a relationship already with 19% of this market. 1 out of 5 people are already with your bank, and 1 out of 5 in this group. When you look at fintech, of course, it's much higher. And when you look at large multi-location banks, it's much higher. But still, you have a direct responsibility, a direct relationship with almost 20% of this group. And that was Gen Z. When it comes to Millennial, it's just about the same number, 20%. So 20% of these folks are already banking with you. Which brings up the interesting subject of, are we really attracting new people to the bank, or are we doing cross-selling? And I think the answer is both. And what you see here, that how do they want to be reached? They want to be reached by email. They want to be reached by text message, and you may already have a lot of access to that information among your account holders. And just simply being visible in the branch, both in terms of personnel bringing up the subject, or just signage in the bank, has some value, and the call center has some value as well. Not quite as much as a branch, but you can see that a lot of you would not necessarily consider attracting new customers can be done frequently through cross-selling. So to kind of summarize all of that, how you reach these folks: email, internet, social media, TV, and direct mail is secondary, and is primarily due to cost, and the lack of in-depth message delivery. I'll put it that way. One half of the market is almost cross-selling infrequently, and it's a secondary bank or credit union, email and text, and phone call to and branch personnel and signage. Okay, that's the entire region. Now let's focus on Michigan here. Well, in Michigan, 12% of the market says that they intend to switch in 2 years, or 1 or 2 years, compared to the 16% in the region. So it's a little bit more of a stable market than the region. But when it comes to Millennial and Gen Z, the numbers are almost identical. Once again, 30%. We look at where people bank, and you can see credit unions are much more likely to be could be the primary financial institution. That is the case for the region. The region is 14% of people say credit union is the primary financial institution, as opposed to 29% in Michigan. And this has some pretty profound implications. One of the big ones is we ask people, are they satisfied with with the interest rates on savings? And across the region, 12% say I'm very or extremely dissatisfied. 12%. In Michigan, that number is only 5%. And we would expect that that's driven by the banking habits of Michiganders, and in fact, it is. In this state, Michiganders are much less likely to have the primary account with a large bank, and much more likely to have their accounts with a credit card, with a credit union, and that likely accounts for the higher levels of satisfaction on savings accounts. How do they bank? Not significantly different than that in the region, although somewhat different. They're less likely in Michigan to be using mobile banking, and more likely to be using peer-to-peer payment apps. And that's and on the other forms of bank access, they're very similar, although they're somewhat less likely to be in a branch than the folks in the region, but they still follow the same basic pattern. So when we develop the marketing message, it would seem to us that you lose savings interest rates as a significant significant content in solicitation, unless, of course, you are promoting savings interest rates and you have a particular advantage that's a strength of your bank. Have at it, but recognize that the resistance to switch because of interest rates on savings accounts is lower in Michigan than it's going to be in the Midwest. Secondary messages are not really different. Convenient branches, and you're really speaking to the fintech folks there. But although digital is extremely important because most people bank that way, or frequent access is through digital communications and access. Credit card fees, credit card cash back, and incentives. Once again, it's dollars to open an account. So when we look at how people are going to find this new bank, you see that the circle on the left is the region and the circle on the right is Michigan. And they are less likely to go to their secondary bank and more likely to find a new primary bank. Why? The reason for that is the high levels of dissatisfaction with the fintech, which is frequently a secondary bank in its group, leads them into, gee, I really don't want to go there. I'm dissatisfied with my primary bank, and I'm also dissatisfied with my secondary bank, so I'm going to go do a clean sheet of paper here and go get an all new bank, or I'm unsure of how I'm going to go about this. The relationship with secondary is somewhat less in Michigan. You can see 14% you have relationship with secondary, and about 14% of millennials and Gen Z. And that's our pitch. Questions?
Thanks, Steve. You can unmute yourself and ask verbally, or you can certainly use the chat. I do have a couple requests for the slide deck. Will you be sharing those with us that I can send out to the group?
Oh, you can send this out, sure.
Okay.
Sure.
That would be great. Any questions for Steve? Anything you'd like him to dig a little bit deeper into? All right. Well, lots of good information. You have his contact information there along with his team in case you'd like to reach out and get a little bit, a few more resources, but I will stop the recording and I will send out the link for that along with the slide deck and Steve's contact information. And please let us know if we can help you out with anything else. So thank you, Steve.
Hey,
great presentation.
Thanks so much.
Thanks.
Take care. Be warm.
You as well.
Okay.